Happy Monday, guys. Getting it kicked off by myself. This is crazy. If y'all watch us every week, Steve has got a couple of things that popped up, and he's not going to be joining me today. So you're going to have to deal with me. The biggest thing about that is I need comments and I need questions because I've got a topic that I think is really, really good today. But, when you're rolling solo, it gets a little bit boring, a little bit monotonous. So if you've got comments, you got questions, let me know, even if they are after the fact. I want to know about them. It's Monday. We typically do this after hours. It's 5 o'clock. And so we always start off with a little bit of beverage. So wow, that looks like a really big pour. It's not that big. It was just on level. A little bit of whiskey. I'm going to give you this little life hack. If there's a liquor store near you that's going out of business, visit them multiple times because they tend to start dropping the price on their liquor, and you're going to get to taste some things you wouldn't normally taste. This stuff is called Sable, Sable. It's really nice. It's dusty. I like it. So cheers. Let's get this thing started. Again, I'm rolling this by myself. So guys, please, questions, comments, and I've got notes here. The whole thing that I want to talk to you about today is, you kind of think that you're kind of protected, right, when you own a home because your mortgage is what it is. And when you buy a house, this is what your mortgage is, and you're good to go. But that's not the case. Even, in Texas, we've got homeowners insurance, and it fluctuates all over the place. Homeowners insurance can go crazy. Taxes. Taxes are even worse in Texas. Everybody else has homeowners insurance too, but taxes are the worst here because it's based on the amount that the county says your house is worth the year that they're doing the taxes. And so if they want to raise values on you $200,000, they're going to do that. Now we've got homestead protections and things like that in place, but I'm not going to mess with that. Just want to talk strictly about what's going on and why are people on the border of losing their houses. And as I go through my notes here, just bear with me again. Usually I've got somebody else that's talking, and I can't do it today. But here's the thing. We've got homeowners that are talking about property tax increases, sometimes $500, $600 a month. $6,000 a year is a lot for a mortgage payment to go up. Again, when you buy your house, if you get a fixed mortgage payment, a 30-year payment or a 20-year payment, you kind of figure your payments are going to stay pretty steady. But we've got insurance companies right now that are escalating the hell out of these things. And I can't completely fault the insurance companies. I hear insurance company margins are like 2%, maybe. And again, if you've got better info than that, let me know. But I'll give you a couple of cases in point. My house here outside of Austin, Texas, modest house, nothing big, 2,200 square feet. And we happen to be in the hill country. Well, about 5 years ago, there was a fire on the west side of where I am, out between Dripping Springs and Fredericksburg, and it burned 400 or 500 acres, burned a couple of houses. And this past spring there was a big fire in Fredericksburg. Well, now because of wildfire risk, our property taxes have started going up. I mean, our insurance has started going up every dang year, and it's not like $100 a year or $300 a year. From where I started 5 years ago to now, our homeowners insurance has tripled in cost. We're talking going from about $2,000 to almost $6,000 a year. Guys, that's a big damn difference. And imagine, look, my wife and I, we save, we're stable, we're pretty good with our money. But imagine you're a first-time home buyer, and all of a sudden your your homeowner's insurance goes up $500 a month. So if you're escrowing your funds, now you have an escrow shortage. They're probably going to raise your mortgage payment $600 or $700 a month to make sure that they don't have a shortfall, because that's what escrow companies do. They don't want a shortfall because they want to be able to pay your taxes and insurance as it comes due. So this is driving people right to the brink, and it's going to start causing foreclosures. And that's not, and the next thing I say, look, I'm extremely blessed. We've got two investment properties in Colorado. Okay. The same thing's happening there because of wildfire risk. And it's not like there's wildfires that are threatening us all the time. I mean, there was one wildfire at our Colorado properties. The closest one was probably 10 miles away, and that happened 3 or 4 years ago. It's the only one that's ever close to us. But with insurance companies, if they lose their butt in the California wildfire, there's no house there to insure anymore, so they're not going to make their money up there. They take that risk and they spread it across all the rest of the houses that they're insuring. And if they're saying, "Oh, well, one time in Dripping Springs, Texas, there was a fire, it was 30 miles from you, but it doesn't matter. We're going to say now you're a higher wildfire risk, and we're going to charge you more, and we're going to escalate your rates." And again, I get why, like, the insurance companies are there to protect us long term. And I'm sure if my house ever burns down here, I will love having that insurance on it. But at the same time, I'm not at risk of a wildfire. I have a house that I've cleared around that, I mean, it would take like a firebomb descending on all sides of me with 100-mile-an-hour winds for my house to burn. It's not happening. But again, I know that I can protect it. Most people are not able to do that. So again, I'm rolling this solo today, guys. If y'all have got questions, thoughts, comments on this, let me know. I'm not the know-it-all behind this. I'm just bringing you in information that I'm seeing, things that are popping up, and it's real issues. Um, One of the big questions that people have, let's say your homeowner's insurance goes up $500 a month. And if you're in Texas or a state like Texas that has escalating property values, your taxes go up, $200 or $300 a month. Now all of a sudden your payment is going $700, $800, $900 a month up. I mean, $12,000 a year. People don't get raises for $12,000 a year. So the question becomes, all right, what do I do? Do I sell it? Do I just try to hold on as long as I can, and maybe those rates will come back down, and I risk going into foreclosure? That's a real concern that people are popping up against right now. And it's something that I'm, when as a realtor, when I'm talking to buyers that are coming into our market out here, these are conversations that I have to have with them. And not everybody, I'm sure not all realtors have these conversations, to be honest. But I've got to have these conversations with them because look, if you're approved for a $5,000 a month mortgage and you max that sucker out, well, what happens next year if it goes up to 6,000? You're not going to make your money back if you sell your house. Not going to do it. Not in a year. Not in this market. I'm telling people now, you need to have a plan to be in your house at least 5 years, and better yet, hopefully 7 to 10 years. Because if you have to sell your house for something like this next year or in 3 years, you're going to lose money. You're going to lose tens of thousands of dollars. So that's kind of that the yin and the yang about it, I guess, right now, is that as a home buyer, if you're a home buyer, you've got to kind of factor in future risk. And not that you didn't have to do that before, but with these values escalating so much, it's a real thing. Next thing I want to chat about, it was a meme going around for a long time. You'll own nothing and you'll be happy about it. And that's the problem, right? Because people who follow the rules, paid on time, bought responsibly, even if you didn't max out your payment, like you could afford 5,000 and you bought $4,000 a month, a $2,000 a month change. Okay, well, that could put you at risk, even though you've got $1,000 of we'll call it delta in there that you can absorb. Okay, well, if your property taxes and insurance goes up this year and then they go up again next year, all of a sudden that $1,000 delta is gone. So you played by the rules. You didn't max out. You didn't become house poor. You were planning on saving $1,000 a month for your kids, college or retirement or whatever. And now all of a sudden, there's nothing there for you because everything that you thought was real is kind of shifting underneath you. So again, if you're in this situation, first of all, if you're in this situation, you have got to shop your insurance every time you can. And usually it's every 6 months, right? If you go directly to a source like Allstate or Liberty Mutual or whatever, it doesn't matter. If you go directly to the source, you may not be getting your best deal. You really, really need to identify at least one insurance broker, if not three or four different insurance brokers, because here's the way this works. Um, Allstate sells Allstate policies. Okay. Liberty Mutual sells Liberty Mutual policies. But if you have a broker, and this is like real estate, I can sell you a house anywhere in Texas. If you've got a broker, then that broker might be able to shop 50 different providers. But here's the thing: in insurance, there might be 200 or 300 providers overall in the U.S. marketplace. Okay, well, if one broker can shop these 50, find another broker, they may be able to shop 20 of the same ones, but then 30 different ones. And then maybe another broker can have a little bit of overlap, but shop some other ones as well. So now you're in, and here's, I love this. I've got policies with Allstate that I could not get if I went directly to Allstate. They're cheaper than what Allstate quoted me because I went through a broker and they have different deals with Allstate than I could get directly through Allstate. So if you're having these issues, and it doesn't matter, even if you're not having these issues, you need to be working with an insurance broker, just like if you were buying a house, you would work with a mortgage broker. Make sure that you're shopping as efficiently as possible, and that means getting a couple of different insurance brokers and using them. The other thing is, like, if you run into temporary hardship, reach out to your mortgage lender, whoever holds your mortgage. Right now, Mr. Cooper owns a lot of them. The MERS system owns a lot of them. Figure out who is servicing your loan. And if you're having a hardship because your insurance went up, your property taxes went up, and now all of a sudden you may have lost a job or they cut your hours back, get in touch with your mortgage holder, your servicer. That's what they're called, and be honest with them. Tell them, hey, all of this stuff went up. I just got cut back. What do I do? And try to work with them. If you send in a partial payment, it's not like rent. They're not going to take a partial payment. If you send in a partial payment, they're going to send it back to you, and now you're late. So if you're having an issue, if you know you're an issue, do not put your head in the sand on this stuff. Reach out to your servicer, reach out to your insurance broker, and talk to them and be upfront with them, be honest, and let them know, hey, I want to make this right. I don't want to foreclose on this thing. This is my dream home, but I don't know if I might have to find a new job and I may be without work for a couple of months here. Like, help me out. Um, they're going to try to help you because no bank, no mortgage servicer wants to sell your house. They don't want to foreclose on you because it's a lot of time and energy that they have to use. And at the end of the day, they're not going to make their money back. So be upfront, be honest with them. And again, if you're in a state like Texas, here's the other thing: if your property taxes go up, or even if they go down, every year I protest my property taxes. Now I've got somebody protesting them for me just because I don't have the time anymore. But if you've got somebody that's trying to get your property taxes down every year, you're going to be in a lot better spot, regardless if property values are going up or down. And I don't know how many states outside of the state of Texas have property values that move on a yearly basis like Texas does, but I can't imagine that we're alone. So if you're in one of those states, make sure you're protesting your property taxes every year. Hold those entities in Texas, it's the county, hold the county responsible for making sure your values are what they're supposed to be, and don't just trust them to do their job. That's not how the government works. They're going to take every bit of money that they can possibly get from you, and they're not going to give it back. So again, there's three things that are kind of action items for you, and you don't even necessarily have to be in a tight spot to make those action items go. I mean, obviously, you're not going to contact your servicer if you're not losing a job or something. But the taxes and the property insurance, work on them every year. Keep them as low as humanly possible. Caveat on that: when you're working with, a lot of times in insurance, and this is tough, whether it's house insurance or car insurance, when you're shopping them out, people want to give you the best bid, right? They want their prices to be as low as humanly possible, so you go with them. That's how they make money. Okay. You have to know enough to make sure that you're actually being insured for what you want to be insured for. You flood insurance. Okay, flood insurance may not be a big thing, but if you're at a slight risk for it, it may be worthwhile. But at the same time, water damage is a completely different thing. So if they remove water damage and you've got a water heater in your attic and that sucker goes out and starts shooting water everywhere, guess what water damage is? That's not flood damage, that's water damage. So make sure you know enough about insurance to understand what your coverage is, and you're not just getting the cheapest insurance that you can get. And I always tell people, look, this is why it helps to know somebody in insurance. And in my case, I have a broker that I work with very closely, and she's extremely honest, and she's local here to my market. So find that person in your market. And again, maybe it's two or three of them, and find them and be able to go to them and say, hey, I'm shopping insurance. This is what I'm getting. A, can you beat it? B, am I getting a good deal? Am I being covered for what I need to be covered for? Because I mean, there's horror stories all the time. If you talk to anybody in insurance, there's horror stories about people that thought they were covered for something and they're not. And the insurance company's like, no, you didn't buy that coverage. You opted out of it. And they didn't know. They just thought that they were getting the cheapest insurance that they could get to cover their home. But there's so many different layers to the insurance, and not just your home, it's your car, motorcycles, RVs, all of that stuff. There's different layers. You got to make sure that you're getting the coverage that you think you are. I'm going to stop beating that horse for a second. I'm going to drink a little bit more whiskey, and I'm going to remind you, if you don't ask questions, you're at the mercy of what I've got written on my paper here, and this might get boring. So if you've got questions, let me know. If you've got thoughts, let me know. I love reading other people's thoughts on this. This is one of my favorites. And you know what? I have I've fallen into this trap a little bit before. This is not about variable rates. A lot of times when we find out a homeowner's like, oh my God, my payment's going way up, and I didn't know. And then people are like, well, you should have read your mortgage contract. You probably got a variable rate interest or something like that. And we are seeing some variable rate interest right now with 3-to-1 buy downs and 2-1 buy downs and stuff like that. But very few people have ARMs. And an ARM is an adjustable rate mortgage. Most people at this point have fixed mortgages. So if you hear somebody telling you this, don't just jump to the conclusion, well, you should have read your contract, this is your fault. This is a real deal with homeowners right now, across the board. So usually I am on the side of read your contract, understand what you're getting into. And I've got to remember and give people some grace at some points that, hey, we all make mistakes, but B, we don't all know what we think we know. Again, going back to the insurance and thinking you had good coverage for your home, but you didn't because you're not a professional in the insurance industry, and some other insurance person gave you crappy advice, somebody that you trusted because you thought they were giving you good advice. So, if you've got friends that are in this problem, don't give them too much of a hard time. Help them out. Um, I love this. Insurance is the new villain. Insurance premiums jump at $300, $400, $500, $1,000 annually. We talked about it, but here's the thing: this isn't a one-time thing. I mentioned with my house about my insurance premium tripling over the last 5 years. That's a real thing. This isn't we can call him the villain, but at the same time, what a lot of people don't understand about insurance is as your house gets older, your insurance goes up. My house now is 9 years old. 5 years ago, it was 4 years old. They considered a new built house. It's up to all the current codes and everything else. Now there's codes on my house because electric codes and plumbing codes are rewritten, sometimes every 2 or 3 years. And so now there's things in my house that are out of code that makes it a larger risk for insurance companies. So my insurance goes up. And also insurance companies like, oh, you live in the country, you don't have a fire hydrant on the end of your block, your fire hydrant's quarter-mile away, your insurance goes up. This is also a thing if you're looking at investment properties. I mean, everybody, like, they love the fact, they're like, oh, you've got Colorado investment properties, you've got houses in the mountains. Yeah, I do. And everybody wants to buy their own. But when you have high wildfire risk and you don't have a fire hydrant within 10 miles, the nearest um, fire station is 15 miles away or 20 miles away, that puts you at a huge, huge risk. That's why the insurance companies ask those questions. So if you're looking for investment properties, make sure you understand what you're getting into with investment properties. I personally, I would love a cabin up on top of a mountain. The more remote, the better. Nobody around me, nothing but amazing views. And, not seeing a person for 30 miles, that would be great. But when I have to insure that thing, whew, talk about a high insurance premium. Same thing. If you dream of insurance on the coast, Texas is a great example. We've had some, after Hurricane Harvey, this happened with people. And the biggest reason is because insurance companies lost their asses, just like they did in California with these recent fires. When you have major insurers, call it Allstate, and they're insuring 40% of the Texas coast, and now all of their people that they're insuring have claims because Harvey came in and then went back out into the Gulf and came in to Houston. So a huge number of people got hit. Insurance companies lost their ass. So all the insurance um, premiums went up. And they also went further inland because if they can if they can grow the people that they're insuring or the number of people they're insuring by 10% by moving it inland, their line inland for windstorm, they're going to do it because they lost money. They've got to recoup it somehow, or else they're going out of business. And if we start losing all our insurance companies, who's going to insure our houses? I don't want the government to do it, me personally. I would rather insurance companies do it, and I understand they have to operate at a profit. So that's kind of the catch-22 that we're in. Insurance companies have to raise their rates. So if you're looking for an investment property in an area that is prone to some type of natural disaster, understand that and plan accordingly. And again, try to mitigate that. Okay, well, maybe if I get a certain elevation, I don't have to get flood insurance. I just need windstorm. Okay, good. So go shopping for a place that isn't waterfront. Maybe it's 3 or 4 streets in where the elevation comes up and you're not going to have storm surge. Or, maybe you go 80 miles inland. I know it's not waterfront, but maybe you go 80 miles inland and you buy something on a river or something. And that way you don't have to have windstorm insurance. So if you're looking at investments, things like that, make sure you understand that, okay, plan ahead, contingency plan. Again, goes back to have a good insurance broker or 3 that you can say, hey, I'm looking to buy a property here, in Galveston, Texas. What do I need to understand from an insurance standpoint? What do I need to look for to make sure that my rates don't go through the roof at some point in the future? Let's go. Hmm. Escrow shortages. Let me explain to you what an escrow shortage is if you don't know. If I have a loan with Mr. Cooper, Fannie Mae, Freddie Mac, whoever the servicer is, um, MERS system. Okay, I get a mortgage with them, and they're going to take escrow. They don't always have to take escrow, but most people end up paying into an escrow account. And what they do is they take your payment, and part of that payment goes into an account for your homeowner's insurance, and part of that payment goes into an escrow account for your tax, your property tax. Okay, and they accrue that through the year, and they build up to where at the end of the year, or whenever your homeowner's insurance comes due, they can pay that property tax in December, or they can pay your homeowner's insurance when that note comes, or when that bill comes due. Okay, that's an escrow account. Um, if you've never gotten an escrow shortage notice, they're terrifying. And yeah, they're just terrifying because you get this letter that says, hey, your escrow account is short $5,000. Would you like to pay it all in one amount, or would you like us to break it down and charge you monthly for it? $5,000. What is that? $600 a month? No, I'm an idiot. $4,000 a month. That's closer. 400 and $420 or something. Anyway, doesn't matter. They give you the choice. You want to pay it at once, or do you want to spread it out over 12 months? Okay. But when you start thinking about it and you're going, wait, $5,000, my property insurance or my property taxes went up 1,000. My insurance went up 2,000. That's 3,000. Why are they asking for $5,000? Because what the company that has the escrow accounts trying to do is make sure that if there's something else that pops up, whether it's another increased insurance premium or your property taxes go up the next year, they don't necessarily have to ask you for an increase in your escrow account again. Maybe there'll be enough in there to buffer that, so they'll only have to ask you for it once instead of twice. And at the same time, the federal government changed the law. If they have too much in your escrow account, and I don't know what the percentage is, but if they have too much in your escrow account, then they have to issue you a refund check. Like, let's say that they can't go over 20% over what your escrow amount is. Okay, well, if your property taxes go down and your insurance comes down and you end up with 25% over in that account, they have to issue a rebate check for 5%. But they're going to try to max out that account to whatever level the government allows them so that they have that buffer. So again, if you are looking and you're going, well, damn, insurance went up 3,000 and property taxes are 1,000, it should be $4,000, but they're asking for five. Don't freak out. That's the reason that they're doing it. Um, no, you can't get them not to do that. But a lot of times you don't have to have an escrow account. If you're over 20% LTV, loan to value ratio, um, you technically do not have to have an escrow account. It's not required for you to do that. You can ask that escrow account to be canceled. Good and bad. One, you have to have the financial responsibility to save that money. So at the end of the year, you can pay your property taxes. And when your insurance comes due, now you can write a check and pay for that. Personally, I've got an interest bearing account. Every month, I take an amount of money, I put it into that interest bearing account. I don't touch it. It makes additional money, not a bunch. It may make me $100 a year, $200 a year, not a lot, but it makes me money instead of making the mortgage company money. And at the end of the year, I write a check and I'm good. And then if I get an increased property tax bill, I know that I have to increase my monthly allotment to make sure that I've got enough money in there. If I have an additional insurance cost, I have to increase that and keep that money in there. So if you're over 20% LTV, you can request that they drop your escrow payment. Now, I don't know if all servicers will do it, but I think most of them will, especially if you're 25 or 30% LTV. In other words, if you've got a $500,000 house and you owe $400,000 or 350 on it, you should be able to get that escrow account dropped. But again, do you want to do it? Is that something that you want to take care of on your own? Most people don't. Most people are like, you know what? I'll just send it in. It's like paying your income taxes every month or having them take it out of your check, because most people don't have the financial stability or uh, discipline. We'll call it discipline to make sure that they pay that stuff. So it's up to you, but you don't have to have an escrow account most of the time. Now, if you're in an FHA loan and you put 5% down, then you have to have an escrow account. Like, that's one of the things that the banks and the servicing companies had them mandate, because again, if you're only putting 5% down on a house, then you are technically a larger risk than somebody that has 20 or 25% down. So they want to make sure their risk is mitigated. So again, if you don't have that much money, uh, that much equity in your house, that much principal paid down, then you're going to have an escrow account regardless. Again, I'm keep going through this, guys. If you've got questions, please ask your questions. I'm just going down my list here, and I'll keep rolling here for another 10 minutes or so. But if you've got questions or thoughts, I want to hear them. Mm, this is a great one, and a lot of people don't talk about this. We talk about the financial toll. Okay, damn it, it's going to cost me an extra $5,000 this year. That's crazy. Okay, but the reason this is such a big thing is because what it does emotionally to people. Again, if you think about it from, let's go back to a first time home buyer. I'm thinking back to when I was a first time home buyer. We had what our payments were, and we were trying to do other things. I was trying to pay down debt on a credit card, trying to start saving for retirement, trying to start saving for different investments and all these things. And had we gotten a notice that our insurance and taxes were going to cost us an extra $5,000 a year, and I remember I was making about $35,000 a year. This is in 2002, 2003. My wife was making about $30,000 a year. We were both teachers. $5,000 is almost 10%, or would have almost been 10% to us. I guess 12% is the number. Um, that would have not allowed us to pay our credit card down. And when you've got that credit card debt and it's accruing at 15% or whatever it is, that's a kick in the junk. It wouldn't have allowed us to start saving for retirement, and that was important to us even at a young age. We were trying to save for kids at the time. What are you going to save when they take 10% of your money, and now you no longer have access to that for the things that you want to do? $5,000 would have been an amazing vacation. Like, back in the day, we probably could have went to Europe for 2 weeks for $5,000. We wouldn't have done it, but we probably could have. So the hardest part about that for a lot of people is the emotional. It's just like, what the hell? How do you, and you get pissed about it. How do you, as an insurance company, have the right to do that to me? How do you, as a taxing entity have the right to do that to me. And so, what happens with, I mean, we know after 2020 people lost their minds right after COVID. I was talking to a friend about it last night. Like, everybody has completely gone mad. Well, now all of a sudden, add into that, you're going to stress the hell out of them with these additional financial obligations. Man, that's a tough situation to be in. Tough situation. Kind of rolling through here. Um, the the other thing on this, and I never want anybody to sell a house unless they want to. And a lot of times on here we talk about a want to market versus a have to market. Right now we're in a have to market. People aren't buying second homes just for giggles now. They're not moving to Austin because they want to move to Austin and they've got a remote job, and that's what was happening during the 2020s. We're in very much a have to market. People are moving here because they have to move to Austin. People are selling their houses because they have to sell their houses. Might be an insurance issue, maybe a tax issue, whatever. People are selling their houses because they have to. That's not what I ever want for somebody. Like, you want these decisions to be made up of happy things, right? Happy decisions. Oh, we're selling our house because we're having our third kid, and we want to get them into this school, and we're so excited, and let's go to, okay, that's great. Not, I've got to sell my house because I thought this was going to be my forever house, and now all of a sudden I can't afford it anymore. That's a crappy conversation to have. But if you're in that spot, if you know somebody else in that spot, reach out to a local realtor and talk to them. I mean, hell, reach out to me, and I might be able to help walk you through some steps, even if I'm not in your market, and kind of answer some questions about the process. And I'm happy to do that. But at the end of the day, you're going to need a good resource locally, just like I was talking about a lender you can talk to, or an insurance broker you can talk to actually get good advice. If you don't have your preferred realtor on speed dial, nobody has speed dial anymore. It doesn't matter. If you don't have them in your phone, um, you need to find one. And not because you're going to sell your house now, even if you're not going to sell your house for 5 years, because you may have questions along the way like, hey, Chris, we're thinking about buying an investment property, but we don't really have all the cash that we think we need. Can we talk to you about this and explore that? Yeah, let's go. Because here's the thing, I'll never make a dime off of that. But at the same time, when I have my clients reaching out to me and having these conversations and having conversations about life and things that are happening and all of that, I know that as their agent, I've done something right, and they feel comfortable confiding in me with that. And I love it. And that means more than any paycheck I'll ever get. It doesn't matter. So if you don't have that person, I could probably be that person for you, even if you're not in my market. But B, you need to find that person in your local market. You really do. I mean, look, if you're watching this show, you like whiskey, you like beer, you like people who don't pull punches and talk to you honestly. Okay. So you need to find that in your local market, and you can do that. And if you don't know anybody in your local market, reach out to me. I know realtors in probably 40 of the 50 states that would, be a lot like me, because I'm not friends with people that are not like me. So anyway, you need that person in your local market. You need to be able to call somebody and talk through massive life decisions, because I can't tell you how many times people are like, hey, oh gosh, we're going to move on to our next house. We're going to sell, and we got our house on the market, and we're looking to buy a new house. And I'm like, well, why are you selling your current house? Well, because that's what you do. We're going to our next house. Well, no, why? Why are you buying your house, or why are you selling your house? A lot of people don't realize you don't have to sell your house necessarily to buy your next one. And this is why it's good to have a good lender. You might be able to put renters in that thing and get enough payment credit from your lender that you don't have to sell that house. You can just go buy your next one, put tenants in your current one, and you don't have to be a landlord either. You just need to have somebody to manage your property for you. I've got 2 properties that I don't manage. I have managers for them. I'm not a landlord. I make massive decisions like, hey, um, I don't know, the roof needs to be replaced. Okay, great. Let's replace a roof. I don't deal with, hey, there's a broken cup. Hey, the toilet's clogged. Hey, I don't deal with those decisions. Nobody could pay me enough to deal with those decisions. So having these people you can talk to are going to, at the end of the day, it's going to put money in your pocket, because if you can do everything you want to do, but not have to sell your house, that's a damn good decision. because if you've got kids or you want to, generate more income in retirement, whatever, real estate. I mean, I'm a big believer in it. What do they always say? Real estate's made more millionaires than any other form of investment. With Bitcoin now, that's probably not real, but anyway, it sounds good, especially as a realtor. Um, yeah, exactly. But anyway, have people that you can talk to about major life decisions, and don't be afraid to reach out to people about major life decisions. Not just me. You wouldn't decide to get your tonsils taken out without talking to your doctor. So why the hell would you decide to sell a house without talking to your financial advisor, without talking to your lender, without talking to your realtor? Why? It doesn't make any sense to me. You've got professionals you can put around you in your life. Utilize them. Last thing I've got written down here, guys. The narrative spreading right now. It started as little kind of pop-up things, right? Like people were complaining about it, and I bitched about it with my insurance broker 2 years ago. Like, what the hell's happening? Why is insurance all of a sudden becoming a major, major cost in my life? And she explained exactly what I explained to you earlier. Like, look, they're getting their butts handed to them over here. They have to have money coming in from somewhere. And okay, that makes sense. And then last year when they went up again, hey, what the hell? So it started out as a few people, and now I'm telling you, I've got a really, really good relationship with my insurance broker, and we have these conversations a lot. Ann Archambault, by the way, in Dripping Springs, Texas, she can write policies all throughout Texas, and I think they've got the ability to write. Well, she shops my Colorado properties for me, so she's got the ability to shop in a lot of states at this point. Maybe I don't know 8 or 9 states, but Ann, I call her up on the phone, and I'm like, Ann, what the hell? And she just laughs and she's like, Chris, you're my 15th call today. You're my 30th call today. It's happening to everybody. So it started out as a little thing that was minor, and it's blowing up into something that's huge. And this is how I feel about it. By the way, again, I'm going to say this, and I keep saying this. If you've got questions on this, put them in the comments. Would love to answer questions because I'm kind of tired of talking on my own stuff. But anyway, um, I have these conversations with Ann, and it allows me to get that perspective. But what I really think is, I don't think enough people pay attention to their finances. If your insurance goes up 1 year and you get an escrow overage or an escrow underage, I don't know. They tell you you're short by $500. Okay, that's fine. The next year it's $1,000, and you're like, okay, maybe that's fine. But a lot of people don't even start shopping until that third year, and there's another increase of like $1,000, and people are going, wait a minute, where the hell did all my money go? Because at that point, if the third year you've increased another $1,000, now over a 3 year period, you've gone from $2,500 a month a year to $5,000 a year, and that's when people go, whoa, what the hell happened? I don't have any additional money here. I don't have, like, where did all of our money go? And so that's what I think is happening is, over time, it's kind of incrementalism. You don't really notice it at first, but then it gets a little weird and you're like, what? And then now it's like, wait, what the hell? This is an emergency. But you can't go back and fix what happened 2 years ago or 3 years ago. And you would be surprised at how many people do not shop their insurance. Um, I am, I'm going to tell you a couple of things here. Insurance is a commodity. Okay. But I don't want you to get the wrong, I don't want you to get the wrong, or the wrong feeling from that. Um, Insurance is 100% necessary, but different companies will cover the exact same thing at different rates. And you need to understand you have the ability to shop that. Okay. What is not a commodity is people that understand what they're doing. This is why I say, personally, I don't go to Allstate and Liberty Mutual and whoever, I don't know, State Farm. I don't even know the insurance companies anymore. I don't go to them individually because they're only selling me their product. I'm going to go to the person that's not the commodity. I'm going to go to Ann, and I'm going to say, Ann, find me a better deal on insurance, please. And I'm going to be able to have that conversation with them. So insurance in and of itself is a commodity. The people that help you through all these issues, they aren't a commodity. They're the real deal. They're the people that you need to have walk you through massive life decisions. I've said it already: insurance, mortgage, real estate, financial advisors, investment advisors, if you want different ones, CPAs. Like, guys, the professional team that you put around yourself, and I don't care if you make $50,000 a year or $500,000 a year, it doesn't matter. You need to find a financial team that can put you, that you can put together around you, so that whatever money you make, you're maximizing. I don't know a single financial advisor, maybe because I haven't met one yet, because I'm sure, like, look, okay, I probably can't go to Lehman Brothers and wait, are they a thing anymore? Or did they get disbanded? Anyway, I'm sure I can't go where the Prince of Saudi Arabia invests his money and have them take me on as a client. That's what I'm trying to say. But the investment advisors that I know, they don't have a minimum. They want to help people in their day-to-day life. I mean, it's a real thing that if you put people around you that will take care of you, it's going to make you better off. I finally have a comment from California. Let's see. Hard to shop insurance, California. Wildfires made companies leave. State Farm in California. Here's what I have heard about California. Yes, but a lot of people left, from what I understand, and help me out with this, Airborne. I think a lot of insurance companies left because, like, they couldn't increase their premiums in order to cover their shortfalls. And I don't live in California. I've got real estate friends all over California, and this is what they've told me, that I hate putting it back on government, but it always goes back to government so many times. I've heard that the state has kind of told the insurance companies there that, no, you can't just raise your rates as you want. We're going to tell you how much you can raise them, and that caused a lot of them to leave. I don't know if that's the case. My question, I would really dig in to try and find, because even if you've got 5 different insurance companies, at that point, it's damn near a monopoly. I get it. And they're all going to charge the same rates more than likely. But even if you've got 5 different insurance companies, are you talking to a broker instead of directly to State Farm? That's my biggest question for you. Because even if there's 5 to shop from, a broker is going to have a different deal with them than what you're going to get directly from them. So try to, and again, I don't have personal experience in California. Maybe insurance brokers don't exist in California, but it would be sure worth a Google search or a Chat GPT search, just to find out. My 2 cents. Again, I'm massive on brokers and what they bring to the table. And by the way, that's also mortgage brokers. It is also investment brokers. I don't want anybody that only delivers one product. I want to see an array of products, and I want to be able to pick what's best for me at the price that's right for me. That's the advice of a 50-year-old who, is moderately successful in life. I'm not, I don't know. I'm not Paris Hilton at that point. I guess I could be if I was born into the Hilton family. I wouldn't want to be. Anyway, guys, if there are no more comments here, I'm going to peace out, finish this whiskey. Please. Okay, good. I don't know if brokers exist in California, but I would definitely find out. Please, if you've got questions after this video is over, even though it's not live, put them in. I answer my comments and I answer the questions on Facebook, on YouTube. I answer them everywhere. I'm here for education. I'm here for help. I'm here for knowledge. Use me. That's what I want. That's what I get out of life. Right? Former high school teacher, former high school football coach. I'm here to help people out. So make sure you use me accordingly. Cheers. Good luck.